Russia has got to go onto a gold standard as quickly as possible. Now, a lot of people would say, well, they're in the middle of a war. The last thing that anyone in the middle of the war can do is to go on the gold standard. But I don't agree with that. I mean, it's certainly been the case from, in this country, in the Napoleonic Wars, we went off the gold standard. First World War, we went off the gold standard. We went back onto a gold bullion standard in 1925, which lasted 1932. Then we went off that bullion standard. It didn't take a war to do it. But the idea that we could have financed the Second World War on a gold standard is regarded by most people as completely ridiculous.
Good evening, and welcome to Economy Update Tonight, where we break down the world's most pressing economic developments with insight and clarity. Tonight, we turn our focus to Russia, a nation making waves in global finance with what may be the most significant monetary shift of this era. Could Russia be on the verge of adopting a gold standard? Well, financial expert and seasoned economist Alasdair Macleod, known for his sharp analysis of macroeconomic trends, strongly believes so. According to Macleod, Moscow may soon move to back its currency, the ruble, with gold, a historic pivot that could disrupt global trade and finance, while possibly triggering dramatic shifts in the international monetary system. Let's unpack this potential move, why it matters, and how it might affect not only Russia, but the economic balance of power worldwide. The big picture, what is Russia planning? For years, Russia has carefully cultivated its gold reserves, officially owning over 2,300 tons. Recently, as Western sanctions tighten, the ruble weakens, and geopolitical tensions rise, experts are increasingly speculating that Russia may execute a bold strategy that goes beyond typical countermeasures. Macleod argues that the Kremlin's next move could involve tying the ruble directly to gold. Backing its currency with gold would allow Russia to stabilize the ruble, neutralize economic sanctions, and undermine the dominance of the Western fiat currency system. Unlike most nations, which hold debt ratios that weaken their ability to pivot toward gold, Russia's relatively low debt-to-GDP ratio positions it as one of the few global players capable of pulling this off effectively. Now, you may wonder, why now? What are the motivations behind such a dramatic shift? BRICS leadership and a geopolitical financial war. Russia assumes the chairmanship of BRICS, the coalition of major emerging economies including Brazil, India, China, and South Africa, on January 1st. Under its leadership, Moscow appears ready to escalate financial and economic measures against what it views as growing Western aggression. While the BRICS bloc had planned discussions on launching a shared currency, these plans have reportedly been delayed, with India and China urging caution. But Russia, Macleod argues, perceives itself already locked in a financial war against the US dollar and other Western currencies. Russia's leadership in BRICS provides an opportune stage for bold moves.
More countries get added under Russia's chairmanship of BRICS, which starts from January the 1st. Excuse me. But I think the thing that is of most interest is the politics behind a new trade settlement currency. Now, we do know there have been enough clues, hints, whatever, articles and so on and so forth coming out of authoritative sources in Russia that a new BRICS currency was planned, and it was going to be presented at this currency, at the summit in Johannesburg. Now, the reason it wasn't, I would put down to two members in particular. One was China, and the other is India. Now, China, it's not China's style to go in and rock the boat. It would rather. I mean, it takes a very long view. I mean, they're proud of being a civilization of, 2,000-3,000 years or whatever. I mean, Confucius, was around at about the time of the Greek philosophers, in fact, just slightly before. So, I mean, there's a very, very long history, and they're very proud of that. And they see, us Westerners as sort of upstarts. But the way in which a long, or if you like, a civilization with a long history works is not by trying to implement change, like that. Russia is very different. As far as Russia is concerned, she's fighting a financial war with the West, and she would rather take a more aggressive stance. So I think that explains China's reluctance. India as well has a problem. India is really between two worlds. It's a nation whose prospects are expanding very rapidly, not just in terms of its Asian connections, but also with the West. It is under considerable political pressure not to tie itself too closely to China, and certainly not to Russia. It is tied to Russia traditionally, really from partition back in 1940, 47, 48, whenever it was. The Gandhis in particular tended to lean towards the Soviets. So that, I think, is a long-standing relationship, which they would rather not maybe make too much of at this time. So you can see they're backing off, if you like, from this. A further point I'd like to make is that India is very much run on Keynesian lines. So the idea of going onto a gold standard doesn't really fit with their economic philosophy. So you can see why these two nations, China and India, between them have been really rather cautious. Particularly if this new BRICS gold-backed currency had come out, then it could have had a devastating effect on the Western alliance's currencies, dollar, euro, sterling, and the yen in particular, because you cannot really run fiat currencies when there is a gold-backed currency, an important gold-backed currency around at the same time. They're like oil and water. They really are. So it could have been very, very destructive if it worked. So I think it was just kicked into the long grass for the moment. However, what's interesting is I've been looking at the way in which some of these currencies have been behaving, and I think some of your listeners may be aware that the Russian ruble has been very weak recently. I mean, bear in mind that it rallied. I mean, the pricing is upside down. So when I say it's a low figure, it's actually a strong ruble. It rallied to around about 60 to the dollar. And since then, it's now collapsed and it's gone back down to around about 100. It's actually rallied a little bit and it's about 97, something like that. So that's quite unpleasant, as you may imagine. Now, as well as that, in order to stabilize it, the Central Bank of Russia has had to increase interest rates by 3.5%. So we're now looking at an interest rate of around about 12%. I mean, this is pretty horrific stuff. The rate of inflation is reckoned to be about 5%. Government spending is racking up. Now, if you actually look at the figures, insofar as they're available, because the Russians aren't exactly giving out a lot of information on their economy at the moment, but if you actually look at the figures, they're not nearly as bad as you would think from the way the currency is performing. I'll come back to that in a second. Chinese yuan has got inflation at zero. And you have got, I mean, I suppose Keynesian would say it's looking a bit deflationary, as it were. So there is no reason why the Chinese yuan should be weak. The Chinese yuan is, I mean, you look at the chart and you think, oops, it's got quite a lot further to go on the downside. Again, we're looking at something which the higher the number, the weaker the yuan is. And then if you look at the rupee, I mean, that looks potentially disastrous. If it breaks down from current levels, which are around about, I think, 70 odd, 72, something like that, it actually looks like a fast track to 100. Again, 100 is a very, very weak rupee. So what's this telling us? Well, I mean, what we do see is that the dollar trade weighted has been rallying, but the dollar's trade weighted is very heavily weighted towards the major other currencies. I mean, particularly the euro, the yen, secondly, and sterling as well, and a few others like Swiss franc and so on. But this is a rather different world from what seems to be going on in the emerging markets. I mean, the emerging market currencies, what's happening, I think, is that the credit worthiness of these minor currencies is rapidly evaporating in the current situation. So even though the dollar is going down in terms of its purchasing power, they're going down even faster. So going back to Russia, what does Russia do? Well, I mean, I think the answer is that Russia has got to go onto a gold standard as quickly as possible. Now, a lot of people would say, well, you know, they're in the middle of a war. The last thing that anyone in the middle of the war can do is to go on to a gold standard. But I don't agree with that. I mean, it's certainly been the case from, you know, in this country, in the Napoleonic Wars, we went off the gold standard. First World War, we went off the gold standard. We went back onto a gold bullion standard in 1925, which lasted to 1932. Then we went off that bullion standard. It didn't take a war to do it. But the idea that we could have financed the Second World War on a gold standard is regarded by most people as...
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
It's actually not all that great. I mean, I know that America throws an awful lot of money, dollars, at military expenditure, but Russia managed to get by on far, far less. And I think that even with the current situation and military expenditure doubling over last year, which seems to be roughly what's happening, we're looking at around about $10 billion equivalent military spending. I mean, you know, $10 billion. I mean, this is not a huge figure. On that basis, and bearing in mind that the government debt to GDP ratio is about 17.5%, would you believe? I mean, no. Also, when you look at the tax rates, income tax 13%. Flat rate, and you look at corporation tax, that's a bit more, that's at 20%. I mean, obviously there are other taxes, you know, the sales taxes and things like that, but, you know, this is an economy which, if it had a stable currency, would actually take off, and it can afford to continue the war against, against NATO through Ukraine. So, to me, I think that it's becoming desperately important for the Russians to stabilize their currency because they're not getting the recognition for their underlying strengths, if you like, in foreign currency markets. So, but it's very easy for them to do this. And I think the principal thing which I would recommend, and I'm actually drafting an article which will be published on the Shift Gold website on Thursday and on the Gold Money website following Monday. So if you'd like to look out for either of those, you'll see it. I explain how this can be done. And even though she's got something like 2,300 tons, you'd probably think that's not enough actually to run a proper gold standard. Well, the experience of the gold standard we had in the wake of the 1844 Bank Charter Act was that what really drove gold flows, in those days it was between different nations on different gold standards, was the differential in the deposit rate. Or in those days it was called the discount rate, because it was a discount rate rather than an interest rate which accumulated. And for the very simple reason that, put it this way, if a bank is offered by the Bank of Russia, which is the case at the moment, 12%, to establish an exchange in terms of gold for rubles, right? It is effectively getting 12% on gold. So after 1 year, 100 ounces becomes 112. Okay, well, how do you finance that? Well, the answer is you go into Western markets where the lease rate for gold is around about 2%. Now, that equates roughly to what you would get if you deposited gold and loaned it out to someone else. So 2% is your cost of obtaining the bullion, And 12% is your return by giving it to the Bank of Russia, or what I would call the issue department, which has to be completely separate. And the issue department manages the deposit rate. It's nothing to do with the economy anymore. All about managing the level of gold reserves held in the issuing department. I mean, it's quite simple. First of all, the Russian banks will be doing this. I think you will find that a lot of the Russian expats, oligarchs, and all the rest of it, many of which have ended up in places like Dubai, have got out because they were concerned about the potential instability of the ruble and the possibility that perhaps Russia might not win this war. Possibly they might even be called up. I think those people would return their money very, very rapidly through the banking system into the ruble. So this, I mean, I think it would reverse capital flows really quite quickly. Then, when there is sufficient capital, gold bullion capital in the issue department, at that stage it can then start normalizing interest rates, not in terms of, if you like, trying to control money supply. No, not at all. Controlling the level of bullion reserves in the issue department. That is going to be the function of it. And that way, Russia could very, very quickly, I mean, in a matter of months, not only establish a new gold-backed ruble, in other words, fully exchangeable into rubles. It will probably need about 6 months to design a new coin, which I reckon would be a 50,000 ruble coin, which would equate with as about $500. It would also equate with our gold sovereign, which is priced around about a little bit under £400. So you can see that it would, it would be a coin of similar to what we've already got. That would probably take about 6 months. But there's no reason why the bullion exchange part of it cannot be done immediately. And the Russian banks, I think, would go for it very, very quickly because of the arbitrage opportunity. And of course, this has a knock-on effect. We have sanctions against Russia. London can't do anything about it. But what can happen is a Middle Eastern agent, say from Dubai, where, which is a major gold center in the Middle East, he walks into London and just cleans out the market because of the arbitrage opportunity. The price of gold is irrelevant in all this. What matters is 2%, 10%. What's not to like about the differential? And that will drive the gold very, very.
If it chooses to back the ruble with gold rather than waiting for more cautious BRICS allies, it may set a precedent for an alternative financial system that could challenge the Western-dominated order. But is going back to gold even possible? And what would it mean for Russia's economy? Why a gold-backed ruble makes strategic sense. Macleod makes a compelling argument for why a return to the gold standard would benefit Russia. As it stands, the ruble has been under considerable strain in recent months, weighed down by military expenses related to the war in Ukraine and heightened inflation, which has forced the central bank to hike interest rates as high as 12%. However, one critical difference between Russia's economy and many of its Western counterparts is its manageable debt. With a relatively low debt-to-GDP ratio, Russia has the flexibility to undertake unconventional monetary strategies like a gold standard. Gold, as Macleod explains, is universally accepted and not subject to the sanctions or market manipulation that fiat currencies often face. A gold-backed ruble could also make Russia's currency highly attractive to foreign investors, boosting demand and even encouraging expatriated Russian capital to return home. Past examples show us how gold can stabilize economies under strain. By offering competitive returns on gold deposits, through higher interest rates, Russia could attract new capital flows into its reserves. It's not just about stability. It's about creating a system that commands trust in a climate of skepticism about fiat currencies. The global aftershock, what this means for the world. Should Russia move forward with this gold-backed currency, the repercussions on the global economy could be tremendous. Macleod warns that the move would directly challenge fiat currencies like the US dollar, the euro, and the Japanese yen. Here's where things could get tricky. Fiat currencies derive their value from state control and public trust. A gold-backed ruble, on the other hand, could reintroduce a tangible, universally valued standard to currency trading, a concept widely abandoned since the U.S. left the gold standard in the 1970s. The coexistence of fiat currencies with a significant gold-backed competitor would be precarious at best. Macleod compares the two to oil and water, suggesting that they simply cannot mix. If Russia succeeds, we may see a wave of volatility in global markets as investors reassess the value of major world currencies relative to gold. And while some say this could create turbulence for global trade, others note a potential longer-term benefit, a shift toward more stable, less manipulated monetary systems. How Russia could implement a gold standard. Macleod also outlines the steps Russia might take to reintroduce a gold-backed ruble. Setting up this system, believe it or not, would not take years. It could happen in a matter of months. Key elements would include creating a specialized department to manage the issuance of the gold-backed ruble, minting or designing new coins tied to specific gold values, leveraging Russia's existing market expertise to exploit arbitrage in global gold trading. These steps may seem ambitious, but Russia's preparedness, built up through years of quietly accumulating gold reserves, gives it a strong starting point. For investors globally, this would be a development to monitor closely, particularly for those with stakes in precious metals, commodities, or currency trading. What investors should watch for? If Russia does commit to the gold standard, it may ignite a renewed demand for physical gold, driving up prices in global markets. Countries with sizable gold reserves could also benefit, while nations heavily reliant on fiat currency systems might become increasingly vulnerable. For ordinary investors, this could be a wake-up call. Precious metals, particularly gold and silver, are likely to see heightened interest as people hedge against the potential instability of fiat currencies. Macleod's analysis highlights just how pivotal Russia's monetary policy could be, not just for its own economy, but for the global financial system at large. Whether or not Moscow moves forward with the gold standard, the possibility alone raises significant questions about the future of money, trade, and economic power dynamics. What happens next is anyone's guess, but one thing is clear: we are living in unprecedented times with the potential for monumental financial change. And that wraps up our feature on this fascinating development. Stay tuned as we bring you continued coverage and expert commentary on the evolving global economy. Thanks for watching, and we'll see you next time on Economy Update Tonight. Good night!